Hi everyone, welcome to another weekly Forex forecast for the week ending July 17th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the New Zealand dollar versus the US dollar, as well as the Euro versus the Canadian dollar. And we're going to wrap things up with gold or XAUUSD. I'll show you what the break above 1800 could mean for the yellow metal over the coming weeks, and we're also going to take a look at a New Zealand dollar breakout and see if buyers can hold it above a key level this week. We're also going to take a look at the EURCAD, which has been consolidating for several months, but could be on the brink of a breakout. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up we have the EURUSD, and the pair continues to consolidate above this descending channel that I've been talking about now for several weeks. So you can see where the top of this channel extends from some of these highs, and the lower level again from some of these lows. So we had a breakout on this candle here, and we also had a retest of that area as new support. However, buyers have been unable to climb above 113.50, which is the resistance level I pointed out over a week ago. So you can see how some of these recent highs back here create a key resistance level around 113.50. So as always, it's going to take a daily close above that area to expose the top of this channel around 114.20. So as of right now, even though we have had a breakout, the chart is pretty messy and we've had a lot of back and forth price action. So the follow through here has been lacking in the sense that notice how we had this breakout here. We then had a down candle, an up candle, down candle, and up candle. So right now we're essentially just kind of chopping back and forth between this area. So ideally, I would like to see some kind of momentum build here where we get a break above 113.50 and move higher in a stair-step fashion. So until that happens, the EURUSD is not a great trade. That said, as long as the 1200 area does hold as support for the week ahead, look for a potential close above 113.50, which again would expose 114.20 and perhaps that 115 area that I mentioned last weekend. Alternatively, if we see the euro rotate lower and start to take out the top of this channel right around 112, maybe 112.20, that would expose this 111.70 area. Of course, that is going to be a must-hold level, and if it does break, we could see the EURUSD trend lower down here toward 111. So all in all, if you're not in the euro yet, it might be best to stay on the sideline and wait for some type of momentum to build here, which could come following a daily close above that 113.50 area. Next up, we have the pound versus the US dollar. I wrote about this one last week on the blog and mentioned how we have this trend line that extends from the 2019 high. So this trend line back here, you can see, intersects with the price somewhere around 126.80. Now there is a chance that this level is a bit lower and actually rejected the pair last week on these two candles. But I'm going to go ahead for now and keep the level right where it is, around 126.80. Now as for key support, 125.30 is going to be the level to watch. Notice how back here it served as support. The pair broke below it, 125.30 became resistance, and now of course because we're back above it, that area is support. But as I wrote last week, the pound really needs to get above this trend line right around 126.80 if it wants to see higher prices. So a daily close above 126.80 would expose the 127.80 to 128 area, which of course is this high back here. And if I scroll back, you can see where that 128 area has actually served as a pivot in the past. So look back here, even though the pair did break below it right through here, this 128 region has been a key factor in the past. So it's going to be a key level going forward as well. So right now, until the pound either breaks below 125.30 or above that 126.80 level on a daily closing basis, there isn't a whole lot to do here. However, if we get above 126.80, look for a move up into that 128 area with a daily close above that, taking on the top of this ascending channel that has been intact for several weeks. All right, so notice how the pound has been moving within this ascending channel. Therefore, a break above this trend line could give us a retest of the top of that channel somewhere around the 130 handle. Alternatively, of course, a daily close below 125.30 could take on the bottom of that ascending channel somewhere around the 124 handle, perhaps just above it. So I know I've talked about the New Zealand dollar a lot recently, but for good reason. So we had this false break back here in March where the pair closed below this multi-year wedge pattern. So if I go back here, you can see where the bottom of this wedge started from the 2000 lows. It then connects with this 2008 financial crisis low. And you can also see how recently we did have a bounce right from that support level. March then closed below that wedge support and traded below it for several months. However, June closed back inside this wedge pattern, which means that this looks like a false break to me. And a false break like this to one side of a pattern often triggers a move in the opposite direction. In other words, a higher NZDUSD. So if I move in here to the weekly time frame, you can see how well defined the top of this wedge is. And you can also see where the New Zealand dollar found resistance here several weeks ago and is currently trying to break the top of that wedge. So drilling down deeper, if I go to the daily time frame, notice where last week did close above the top of that wedge. So as of right now, I would put this area somewhere around 65.50. And it's debatable whether it's here or perhaps a bit higher. However, if I draw it here, notice how last week this candle right here closed back below it after breaking higher intraday. We then had a daily close above it, and Thursday and Friday both found support right around 65.50. So as long as the pair holds above this 65.50 level on a daily closing basis, you have to at least respect the potential for a break higher. Now, if 6,600 breaks next week, so we get a daily close above it, look for a move up to this swing high back here, somewhere around 67.40. Now, there will be some other key levels in here as well, including this area around 66.30/40. So if you'll notice back here, we have this high back here, and then we also have some lows and again some highs. So there will be some pivots through this area to keep an eye on, but I do think if the New Zealand dollar can hold above 65.50 going forward, that could be what it takes to see the pair run up toward that 67.30/40 area. Alternatively, if we see a daily close below 65.50, that would signal weakness and could also expose this recent support area around 63.80. So in my opinion, the New Zealand dollar could present an opportunity either way, simply because if we do see a daily close above 6,600, that could be what it takes for a run up to 67.30/40, whereas if we see a daily close below 65.50, that could present a short opportunity, as it would indicate that this up here was a false break and also expose 63.80. But as long as this momentum is intact and the pair is holding above 65.50, I do like the idea of a push higher into 67.30/40. Next up, we have the euro versus the Canadian dollar. And one look at this chart and you can see how the pair has been incredibly indecisive over the last few months. So we've had a ton of back and forth price action back here ever since this rally earlier in the year. So all of this choppy price action has made the pair unfavorable, especially when you consider that we're just going sideways. We don't even really have any momentum here. However, if you'll notice, we do have a key lower level here, and we also have an upper level that outlines the latest consolidation, and if broken, could provide a breakout opportunity. Now, if we get a break lower, the first key level I'd keep an eye on is that 150 handle. This is the area that supported the pair back here. And if we get a break higher, here's how I would treat that. So if I zoom in, you can see where this lower level, if I use a channel instead of just a trend line and use this same lower boundary, and then I drag the upper level across some of these recent highs, you can see how these two highs back here line up perfectly with the top of that channel. So we have these two highs here, and of course, these same swing lows. So if we do get a daily close above the top of this wedge pattern, somewhere right around 154, perhaps just below it, that could be what it takes for an eventual move up here into channel resistance. But just keep in mind that, again, everything here has been really back and forth. Every time we have one or two up days, we have a down day. and vice versa. So this back and forth price action means you have to be careful here and be really patient when timing your entries. But if I was going to trade the EURCAD, this is how I would play it, where a daily close below this wedge would expose the 150 area, where a daily close above it could take on the top of that channel somewhere around 156.50. But as of right now, until we get either a daily close above this resistance level or below this support level, there isn't much to do here. So this is one to just keep an eye on for now, as a breakout could provide an opportunity over the coming days. Gold, or XAUUSD in this case, has been a great pair to trade over the last few months. So I've been bullish here ever since earlier in the year, and you can see where after this liquidation event back here, the pair recovered and also climbed above that 1680 level. So we had this close above 1680, then this area became support on a daily closing basis. Notice how gold never did close below 1680 after breaking above it. And as I wrote several weeks ago, 1750 was the key resistance level to keep an eye on. Again, just like support, gold never closed the day above 1750. We then had this close right here. Gold retested 1750 the very next day and even formed a bullish pin bar that I mentioned on the blog. So this bullish pin bar, a 50% retracement, an entry right there would have been ideal, which I also talked about for a run up to 1800. Now, if you've seen some of my recent videos, you know that 1800 is a key level for gold going all the way back here to 2011 and 2012. So this is the all-time high back here for gold. And notice how 1800 served as support back here and then resistance for several months. So as of right now, we do have a weekly close above 1800. Now it is pretty marginal, but if we look at the daily time frame, you can see where gold so far is holding above 1800. So we closed above it here on Wednesday, then retested it on both Thursday and Friday. So this to me up here just looks like consolidation after climbing above 1800. So we'll see if gold can hold on to this, but if we see last week's high taken out, in my opinion, that could be the start of a run toward gold's all-time high around $1,900, perhaps just above it. But as always, 1800 has to hold on a daily closing basis. If we see gold close below it, that would signal weakness and expose 1750. But as I just mentioned, if we do see gold start to rotate higher this week and take out last week's high, that could be the beginning of that march higher into the $1,900 area, perhaps just above it somewhere around 1920. So as I've said for months here, I continue to like buying the dips or breakouts as long as this uptrend is intact. Even if we were to see a daily close below 1800, in my opinion, that would not be enough to short gold. Instead, I would rather look to be a buyer on a rotation into 1750 for an eventual push and break above $1,800. But as of right now, 1800 is holding as support. And again, there is not much to prevent a run at all-time highs around the $1,900 mark. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.